Hi everyone, let's go over my medium time frame, low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with the medium time frame bullish scenario where we are looking for a finished WXY correction where we're now looking for a move towards the upside. In this particular scenario, wave Y is a zigzag after wave W has also been a zigzag, and this leads a little bit to a problem because in a sideways double combo where a WXY is a sideways ranging structure, wave W and wave Y have to be different structures. That if wave W is a zigzag, you want a wave Y to be either an expanding flat or a triangle, but in this case it is again a zigzag leading to a double zigzag WXY, but usually a double zigzag is a sharp structure to the downside, something like this, and we actually had a double zigzag over here, and you can see how sharp that was to the downside. So that lowers the probabilities at the moment of this particular scenario. Now if we then zoom in to this wave Y, as mentioned, we have to be looking for an ABC to the downside, meaning a 3 wave correction and another 5 wave move to the downside. In this scenario, wave C reached the 1.618 trend-based fib extension taken from the high to the low of A to the high of wave B, which is a rare target for a wave C, but a common target for a wave 3. The most common target for a wave C is between the 1 and the 1.236, which, as you can see, has been broken over here, and we're now ranging below that common target. If we then zoom in to wave C, we are looking for a 5-wave structure to the downside because wave C is an impulse to the downside. And then inside that wave C, we are then looking for a wave 1, wave 2, 3, 4 and a truncated 5th. In this scenario, wave 1 was a nice leading diagonal where all the waves were zigzags. Wave 2 was very, very short. It didn't even hit the 0.382 fib time taken from the high to the low of 1, which is very, very rare as well. You don't see that very often. So wave 2 was very short, but therefore we would expect a wave 4 to be much longer than wave 2. But as you can see, if this over here is your wave 4, or at least any structure of this, then it is clearly not longer or much longer than this wave 2, which is not really something that you like to see. Besides, if this is then the low of a wave 5, because wave 3 is then the high volume candle here to the downside, short wave 4, and then a truncated wave 5 where wave 5 does not take the low of 3, that is also extremely rare and not something that you want to see. So all of this on the different time frames are not really giving high probabilities to this particular scenario at the moment. If we then go to the bearish scenario, we're looking for an expanding flat in an ABC or a WXY. It doesn't really matter for the target. What's most important is that the wave C most common target here is between the 1.618, which is between 23.4K and 22K. Now in a WXY, you would then count this as a wave W, X, and this being an expanding flat, but then you're still going to be looking for a C to the downside. So this remains an important target for this particular scenario. And we also have some additional support in this area around the 22K area. As you can see, I have a blue support box here between 21.8K and 22.6K. Now a rare target for a wave C is the 2.618, which is all the way down here. So even if price would drop all the way to the downside, of course probabilities are not on the side that it happens, but 18.1K is officially still a target for a wave C. Now what is interesting is that on Bybit, this low was taken, and based on statistics, there's a high probability that on other exchanges this low will also be taken to at least align all the different charts. Now on my Coinbase chart over here, you can see that the low has not yet been taken, increasing the probabilities for at least one more move to the downside. And then of course we just look at what the reaction is. Now if we then zoom in to the structure we have over here, then on the lower time frames we are looking at an impulse to the downside, which is not yet finished in this particular scenario. So here we are looking for a wave 1 to the downside, where you have a diagonal again, so a 1, 2, 3, sideways 4, 5, not a diagonal, just a normal impulse, sorry, with then in wave 2 a WXY, where we have an expanding flat, wave W, then you have a wave X and a zigzag in a wave Y. There is no option to make this the low of a wave 1. because this is an impulse, this is a three-wave structure, and an impulse correction three-wave structure is not allowed in a corrective move. So it has to be here a flat, which is very, very nice, hit all the targets, X, and then a zigzag in a wave 2. So that works brilliantly. For then price moving down, hitting the 1.618, which is a common target for a wave 3. Nice to see price ranging on top of the 1.618 as well. But the 1.618 is usually only a minimum target, and yes, price can return here for then a 4 and a 5, but it can extend, like wave 3 can extend much, much deeper. But in this particular scenario, wave 3 over here is not yet in, because inside wave 3 we are counting a 5-wave structure, and then again a wave 1, 2, 3, 4, looking for another 5. So not a truncated fifth, we're looking for another wave 5 to the downside, which is most common on lower volume as well. So this low over here had the highest amount of volume, and what you prefer to see in an impulsive structure is another low on lower volume, where you then have a 3, 4, and wave 5 is made on lower volume. So in this scenario, it could be interesting to take this low on all the other charts as well, to at least align the charts, have a bounce in this area where we also have still some additional support. My white target box, it has been touched once, but as you can see, only the top and not the other confluences in this area. So we could potentially bounce then over here, where the most common target area for a wave 5 is between the 1.236 and the 1.618, which is in confluence with the low and the support box I've just shown you, for then a move back towards the upside in a ranging wave 4, before then a 5 to the downside, where for a wave 4 the 382 and the 05 are always important targets between 26.5 and 27.2k. If we then look at the micro scenario, we zoom in to this wave 3 over here, then we are looking for, as mentioned, a 5-wave move to the downside, where wave 5 is not yet in. So in this scenario, we then have wave 1, 2, 3, sideways 4, and eventually you expect a continuation of the trend to the downside. Now, because as mentioned, this wave 2 is so short, you expect the wave 4 to be a lot longer, as well as a shallow retracement. So in this scenario, the 382 has already been hit with this move over here to the upside. So from the wick low to the upside, the 382 was hit. And most commonly a wave 4 is around the 382 level, so that's actually quite nice. The 0.5 is also a level that is reached quite often, and if price moves above the 0.5, it invalidates a potential wave 4. You don't want to see candles close over here, and especially if you go to the golden pocket with the fips, by the way, taken from the high of 2 to the low of 3, that is not something you like to see. So that is why I have the invalidation up there. So before price is reaching the invalidation, you want to see at least a new low to be made on the chart before then you go maybe back towards the upside. Now in this particular scenario, we do have some confluences. So around here in this area, we have the monthly as resistance at 27.2k. Below us over here, daily naked point of control 24,975. Plus, of course, the target box that we have in white, which I'll show you here as well, which is between 24,850 and 24.3k. So in this scenario, we then expect another move to the downside. That doesn't mean price can't range and continue to range as it did in the weekend, with above us over here a resistance area between 26.4 and 26.5k. And we have to wait and see if price can reach this area. Currently, we still have a double top over here because this little high did not take this one over here, so we still have an interesting double top at the highs that might be taken. We did take the triple bottom that we have over here during the weekend with a nice wick move to the upside of this horizontal range over here. So for a range trader, it's been quite a nice weekend, I suppose. But now we have a double top over here, which could be interesting for a bit of a liquidity grab hitting this area. And then we observe the reaction over here. If this area can be taken and price moves to the upside, the next area of interest is going to be the top of the channel. Basically, if you pull a channel, it's going to be like 26.7k. And then it's going to be the monthly all the way up there. More locally, we do have different divergences going on. It's a bit of a mix on the lower time frames, where you can see the green lines, those are the bullish CVD divergences, and the red line is the bearish one. So we have the bullish one. This one over here did not yet play out because this high has not yet been taken. This bullish CVD divergence did play out because this high got taken. So we can remove this one now from the chart. That leaves us with these bullish CVD divergences, where the first target is going to be at least to take this high. More locally though, we also have between this high and the lower high, it's literally a few dollars, but hey, there is bearish CVD divergences there where the target would be this low. And currently locally, as price is moving down, we also have some bearish CVD divergences, but also actually bullish one. And I didn't put them on the chart for the following reason. You can see, first of all, the blue line, by the way. So that is a bullish CVD divergence I could have put on my chart. Higher low on price, lower low on the CVD. The main thing with this blue line is I'm not sure if I trust that CVD too much, because as price has been ranging over here, the blue CVD is moving down, 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 down. And in a strong downtrend where you have like candles with a high amount of volume, like we had over here, there is a tendency for CVD to be leading. There's, I should say, a higher probability for CVD to be leading CVD, meaning that price follows the CVD to the downside, follows the line to the downside. So I'm a bit wary of like this blue line moving down, 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 down all the time. More locally, looking at the yellow line over here, we had bullish CVD divergence. So you can see over here the yellow line dropping to the downside quite nicely. So that creates a higher low on price, lower low on the CVD. But then soon after, you start to create these bearish CVD divergences locally. So over here, lower highs on price, but now you can see higher high here on the CVD. Even when there's red candles closing, you can see that the CVD moves to the upside, which is an in-candle CVD. So there's basically more buyers than there are sellers in this red candle, but the candle closed red. So that is a bearish CVD divergence. You can actually see the same happening at the moment of recording over here, which is not really something you like to see if you want to see price moving to the upside. So we have to wait and see what's going to happen more locally. But if we then go to the probabilities of the different scenarios, then at the moment the probabilities on the medium time frame are higher to at least make a new low and then take it from there. That means that on the low time frame we are also still looking for at least a new low to be made, and then we wait for the reaction and see what's up. And on the micro, well, on the micro, it was looking nice to at least, potentially hit this blue resistance area over there. And we have to wait and see if price can manage to reach that area, because it's already been ranging for quite a while, especially in this local small range over here throughout the weekend. Got some bearish CVD divergences. However, bottom line, we are still looking for a move to the downside, and any longs are against the trend. And they say trade with the trend, or the trend is your friend. Now, no financial advice, of course. You do you, and if your plan is respected, you should take whatever it is. But yeah, eventually everything is still pointing towards at least making a new low, and then we take it from there. So I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use, in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I see you at the next one. Bye bye.